What up, guys? It's your boy. I'm back with another one. It's been a while, I know, since I've released a new video, and I promise this one is going to be worth it. I'm back with some new stuff, some gems. So make sure that you stick around long enough. I also have two indicators that I'm going to relieve at the end of the video, whereby you can use them according to price action as well. It's two moving averages, and I'll also show you the settings. So make sure that you stick around until the end of the video so you can get this amazing strategy that you can use to follow trend. So without any further waste of time, guys, let's jump right into it. So guys, yes, you know my videos, I've been dropping videos about indicators and smart money concept, okay, but this video is going to be about price action itself, but it's not going to be about smart money. I'll be talking about two moving averages and retail trading, retail approach, okay, trend lines and stuff. Because what I've realized is that most of you all are actually not familiar with smart money concept, and you've been trading with trend lines, and everybody, as soon as they get into this trading industry, all they start and jump into is trend lines. So in this video I'll be highlighting some facts, and hopefully I'll enlighten your trendline strategies. Okay, so let's jump right into it, guys. As you can see on the chart, I've highlighted my high and my lows, okay, which here what we see is actually a double top. Okay, first touch, second touch, and looks like we are going to head for the third touch, hopefully. Okay, so what I see here is also a price ranging. Okay, this is a range. This whole price action is a range, is a market ranging in between. As you can see, we had double top, and what happened was price created the first touch and the second touch and the third touch. Okay, this proves that this level is strong enough to hold the price. Okay, this level was valid, this level is valid, reason why the price kept bouncing back from it. So until we got to this point, when it got to this point, the market tried to break out, of which it did break out, but it failed to retest, as you know, break out. It failed to come back and retest this level before continuing its price action downtrend. Okay, so what happened was price broke out, failed to this level failed to hold as a resistance, and it went back again into the range, broke out again, still failed to the buyers were actually strong, and there were a lot of buyers on this level, reason why price didn't sell after breaking out. So the buyers were strong. As you can see, this is a daily chart. So price went back again into the range. While we look at this range, we also have a trend line, a channel within this range. Okay, we have a channel within this range, as you can see, which also would have which also played a big role on this analysis. Okay, on this price action, it played a big role on this analysis, because if without using the trend lines, you would have gotten lost. Like, okay, why is price actually breaking out of this level and not retesting it and continuing with its downtrend? Because this is a pattern, guys. Okay, this is a reversal pattern. We have different patterns on the market. This is a reversal pattern. Okay, when you see a pattern like this, it's a reversal pattern. Actually, it's a reversal pattern. Also, it can be a continuation pattern. Okay, so the only way you would have entered these trades or this range is by using trend lines. As you can see, guys, let me try to zoom in a little bit. Okay, there we go. So as you can see, guys, we all know that the market reacts mostly after a third touch. Okay, the market becomes volatile after a third touch, even though the market didn't really touch all these candlesticks all, even if the candlesticks didn't touch this trend line perfectly, but let's say this was the first touch, second touch, and a third touch, and then the market reacted from that level. So what happened was price was on a downtrend. Okay, price was on a short-term downtrend. Let me not say short-term because it's a daily time frame. It's a long-term. This one, it's a long-term downtrend, and price managed to break out of that downtrend, which also leads us to the third touch. As you can see, first touch, second touch, the market needs to, it doesn't need to, but it might come back for a third touch before now strongly breaking out of this, before it strongly breaks out of this level right here and coming back to retest it and continuing with this downtrend. Okay, so how you would have taken this trade if you have seen this opportunity. Now, how would have you approached this trend? This if you were looking to trade gold at this moment, say the market was maybe still within this downtrend. Okay, if the market was still within this downtrend, what you would have done would have actually wait for a breakout. Okay, wait for a breakout. And a lot of traders, what they do, a lot of traders, they mistake a breakout with as soon as they see a breakout, they want to do what? They want to enter immediately. Okay, of which sometimes that works, but not. I wouldn't advise you to do that. Okay, I would advise you as soon as the breakout, as you can see, we had a breakout. The market broke out. After this breakout, we are now looking for a confirmation to enter. Okay, we are now looking for a confirmation to enter. Most of the traders, as soon as they see a breakout, okay, the candlestick closed above the trend line. Now it's time to buy. Sometimes it's not the case, because sometimes you buy immediately after the price broke out the trend line and the market will reverse back inside the channel. Okay, so I would advise you to wait for a breakout and a confirmation. As you can see, we have a confirmation here. The market broke out, came back and retested this level right here and turned it into a support level. Okay, market broke out the trend line. Okay, came back and retested this area. Okay, this area, and then is now shooting up. Okay, so it's all about confirmations, guys. But also, you can't enter a trade on a daily time frame. Obviously, you have to go down in a lower time frame. The more you go down in a lower time frame, the more you see patterns within patterns, the more you see more patterns. Okay, impulse and correction. Most of the traders, they don't have enough patience to wait for confirmation. They are rushing to a trade, and while I wouldn't advise you to do that. Okay, as you can see, for our time frame now, we've jumped into a 4-hour. Market broke out. Also, since we are on a 4-hour time frame, you can see that we also had a small correction right here. Okay, of which is going to be very visible on a lower time frame. We had a small correction right here. What you would have done is to at least wait for the market to break out and then give you this correction right here. And as soon as it breaks out of this correction, and then you can now buy. But still, the bigger picture was on a daily time frame that the market needed to come back and retested this area. But still, even if you would have entered here, okay, even if you would have entered as soon as after the breakout from this correction, maybe your target, I don't know what your target is, but this is a long-term trade, by the way. It's a swing. You would have hold this for a long period of time and you would have gained huge rewards. Okay, so our target is this level right here. This is the target. Okay, the market still needs to reach this target at some point. It might not be now, but it still needs to get here. This is the bigger picture. Okay, while if you look into scalping and stuff, then you have to go on a lower time frame. But this is the bigger picture of it, guys. When it comes to trading, you don't have to rely on trading alone so you can make money. You don't have to rely on making quick money. Try to look at it as a long-term thing. Okay, it will become better for you that way, because you have better mindset when approaching it. You wouldn't rush into entering trades. You wait for confirmations. Okay, but I understand some of you out there trying to make money and stuff, but try not to make it as make quick money. You can make quick money with it, but it's going to take you a lot of time to master that scalping and being quick with entries, exiting and stuff. Okay, getting back at it, guys, as I was saying, you would have bought here after this correction broke out. Okay, after this breakout, you take a buy, but still the market came back to this level, which is the same level that you took that buy here. Okay, so you would have, my advice was, wait for, you don't have to wait. Okay, you don't have to wait if you don't have enough patience. But as soon as this breaks out, take a buy, maybe close your profits here or somewhere around, somewhere around the price action. Okay, depends what the price action shows you. So take profit and then maybe wait for another entry. As soon as the market comes back to this level, retesting this level right here, then you take another buy. As you can see, guys, if you would have taken a buy here, you would have reaped huge amounts of profits, very huge amounts of profits. Take the buy, stop loss right below here. Boom, look at that. Beautiful. Wow. So it doesn't matter what kind of price action you use, guys. Price action is still price action. There's people who prefer smart money concept and there's the ones who prefer trend lines. Okay, I know there's this thing about smart money concept, trading with the banks and stuff. So like it's the same thing, guys. It's price action. If you can look at it, it's still the same thing. Whether you're using trend lines or using smart money concept, SMC, everything is the same. As long as you are using price action, there are indicators that follow price action, okay? But I highly do not actually recommend you to just use indicator. You should put that in, you should also put some analysis on that indicator, okay? As I was saying, guys, our target is right up there at this level, which is also the 90% rule. Okay, let's see what the market is giving us now. I see a correction. Okay, I see some sort of a correction right here. Hopefully the market would break out of that correction, and as you can see, guys, there we go. We also have a correction here. What I'll be looking for, as I was saying, guys, about entry confirmations, for the market to break out. Okay, don't wait, don't enter as soon as the market breaks out of this level and then you enter. Wait for at least the market to not go up, but usually the market will go up, come back and retest this level right here, okay, before shooting up, before going back up. Okay, it's a confirmation entry plus confluence. Okay, as you can see, we also have a level right there. You can highlight that level as a retest. Okay, this is actually what we are looking for right now. But also, guys, this is a pattern within a pattern. Okay, this is a pattern within a pattern. We might also, we're looking at different possibilities. We're looking at different possibilities on gold because let me remove these drawings right here and show you another possibility. Okay, and show you another possibility, because this is just price action. Your job is to just analyze and wait for price to give you whatever that you need to see, whatever that you're looking for. Okay, also here, guys, this is a trend. As you can see, price keeps bouncing back from this trend line to show that this is a trend, short-term uptrend. Okay, like I said, we are within a range. On a daily time frame, we are within a range and we have patterns within that range. Okay, this is a range. We have a pattern within that range. Okay, let's jump back to a 4-hour time frame. So as you can see, guys, we also have a trend line that goes up. It's an uptrend, and the market actually broke out of this trend line and gave us a correction. Okay, gave us a correction, which this is the correction that it gave us. Okay, as you can see, impulse correction, impulse. So the market might not actually even go touch there now. Okay, it might not go there now, but our job is to just follow price action, guys. Okay, our job is to just follow price action. As you can see, market broke out. Okay, let me just zoom in there. Let's go to an hourly time frame. Let's go to an hourly time frame. As you can see, let me just highlight this level right here. Okay, boom, there we go. So if price fails to break out of this, if price doesn't break out of this level and come back, retest it and continue, then I don't think we will see price getting to this level anytime soon, but it might get there. As I was saying, guys, we also have a pattern right here. Okay, pattern within patterns, guys, pattern within patterns. We just follow what price gives us. Okay, so right now our job is to just wait for what price is giving us. As you can see right here, I think the market is actually trying to sell to the downside. Okay, maybe it's trying to sell to the downside. I don't know to which point, maybe this point. Okay, before actually going up, breaking out, retesting retesting that level, before going up, coming back, going up, coming back, retesting, and continuing the upward movement. Okay, guys, so that's what I see on gold. Okay, that's the bigger picture that I see on gold. This is an hourly time frame. I prefer, ending on an hourly or at least 30 minutes time frame when, looking for stronger moves and strong entries. Okay, let's jump to NAS100, which is the last pair I'm going to analyze, because I've seen something as well on NAS100. By the way, guys, if you are looking for trading guidance and precise signals, okay, because I've started a group. No, I've been having a group which is free. Follow the link on the description, and you find more information about my service on that group. So make sure that you follow the link on the description. It's a Telegram group. Join that Telegram group. I'm going to also leave a link to a broker whereby you also be able to trade. Doesn't matter wherever you are in the world, it's the best broker. Make sure you sign up with that broker and start funding your account and trading. So as I was looking at NAS100, this is NAS100. I was looking at NAS100 and this is what I see. As you can see, I threw some levels right here, on a higher time frame. Okay, there you go. I'll be revealing the moving averages, by the way. Don't forget, make sure that you stick around. So on NAS100 we have a downtrend. Okay, we had a downtrend and the market broke out. Okay, the market broke out and it's retesting now. It has retested this level. Let me highlight it. It has retested this level right here. What happened? The market has retested this level that we had here. Okay, broke out. As I was saying, guys, you don't enter immediately as soon as you see a breakout. No, you wait for price to play out, give it some time to breathe. Okay, give it some time to breathe, and also use confluence is when you use extra confirmations and extra trend lines to enter a trade. As you can see, this entry right here, it's a very strong entry, it's a very strong buy. Okay, because we had a support level, we also have a trend, and a correction. So a buy here would have been amazing. Okay, you take a buy, and then you wait for price. Also, this is also not actually the best entry, but it's a powerful entry. Okay, it's a powerful entry. Also, I'm looking for the price to actually break out of this correction, come back again, or if not, if it doesn't come back, since this is a correction, okay, this is a correction, you can buy as soon as the price breaks out from this correction, take a buy, or like I always say, it's best to just wait for a confirmation. Okay, as soon as price breaks out from this level, you wait for a confirmation and then you take your buy. Okay, you take your buy But look at this beautiful analysis right here, guys. Look at this beautiful analysis. Price broke out of this trend line. Okay, price broke out of this downtrend. Okay, we are looking to buy now. Nothing that is buying now. Our target is somewhere around this level. Okay, last take profit. Okay, first take profit is this one. Okay, we wait for price to get here. First take profit, second take profit. Okay, first take profit, second take profit, third take profit. Okay, that's what we are looking for right now. So in order to get signals, make sure that you follow the link on my description. So now it's time to reveal the moving averages indicator, whereby you can use them to follow price. Okay, if you like using indicators, make sure that you use these. Okay, which is the moving average 20 and moving average 20. It's both moving averages 20. Let me remove these drawings so you can see it properly. This one is the one that you can use on a lower time frame. This one is the one that you can use on a lower time frame. These moving averages are the ones that you can use on a lower time frame if you are looking to scalp. Okay, because they follow trend. It's like they are like a trend line. Okay, they are like a trend line, trend channel, or whatever you want to call it. So the settings are, let's go to the settings. Moving average 20. Okay, moving average 20, length 20, source you turn it to high. Okay, the source you turn it to high. It's SMA. Okay, simple moving average. Okay, so and the color you can the color you can put it to red. The upper one you can put it to red. The higher one again. Let's jump into another moving average. Another one we have moving average 20. They are both moving average 20. Okay, SMA, different colors. Okay, this one you put it to green. There you go. That's it. That's all you need. So how to use it is, try to put some trend lines with it. Okay, you don't have to put some trend lines with it, but try to put some trend lines with it, because itself it's a trend line. Okay, as you can see here, we had a breakout here. We had a breakout. Okay, say this was a breakout. As you can see, breakout. Okay, market broke out, came back, tested this level, went down, tested this level, went down. Now the market broke out again, went up, came back to this moving average. Within this moving average, it bought. With this moving averages, the best thing to do is to just wait for candlesticks confirmation. You have to know your candlesticks right here with this one. Okay, you have to know your candlesticks. It don't always be perfect, but you can use it to just follow price. You can just use it to follow price. Okay, you have to just find it a currency that's find a currency that's not choppy, a currency that follows price nicely. As you can see right here, as I was showing you with analysis, trend lines and stuff, on Euro USD, what we see here, as you can see, I drew some trend lines. It's a channel. So price broke out. Okay, price broke out, came back to retested within these moving averages, went up, shot up. Okay, it's still coming. As soon as it comes back to this moving average, you wait for candlestick confirmation, you enter your buy. Okay, you enter your buy. So guys, as you can see, guys, this moving average is actually, you can use it on your cell phone. I think it's much better on your cell phone. Okay, so as you can see here, market broke out. Okay, broke out, came back, retested, went down, broke out this thingy. Okay, so sometimes you get false signals and stuff, so you have to put some trend lines in there. You have to put some trend lines in there. So yeah, price broke out, came back, retested. It's a channel. It's a channel. So make sure that you follow the links on this description, guys. That's it for this video. Peace, guys. I'm out.